Welcome to Trading Lounge and the Commodity Futures Report for Wednesday, November the 30th. So just starting on the government 10-year yields here. I've done a fair bit of searching around and things and having a look, and I know some folks are taking this as the low here, but I prefer to take it this as the low on this one here. So that's what my research has sort of led me to, but obviously open to debate on that, or conversation or argument or whatever. And the thing that I see here though is that this move up here, as I see it as wave 1 and wave 2, rather than an A wave and a B wave here, and then going up for the C wave and calling the top in here, you know, as an ABC, and then we just come back and life goes on and gets normal again. That's it's all possible, but the reason I don't particularly like that in terms of patterns is that it makes such a nice wave 2. It's simple and it's sharp and so on. As a wave Bs are normally more complicated, and they would have some sort of relationship to wave A, and I just don't see that. So I just figure that that we're in, and also too, this is such a nice third wave rather than a wave C. Because the third wave, you know, is bigger and stronger. This is longer than this one here, and it's also got better form. And what I mean by that is that these corrections here have got, you know, good form to them. They're obvious, rather. Do you know what I mean? Where they're quite tight in here. So the wave 3 is sort of a bit bolder in that regard, you know. So I kind of see it as wave 1 and 2 and 3 up here for this, and based on that, I can see that we've got 5 waves here for 1 and 2, and as I mentioned before, 1, 2, 3, 4, 5 up here for wave 3, 4, and 5, and so working into wave 4 here. Now, you know, in the textbook, wave 4 comes back to the previous wave 4 of 1 lesser degree, or the 38.2%, but I normally find it's kind of higher, and there is really good support here. So anywhere really above, you know, that 3% mark would be fine. And when we call the top in here, we've just really been patiently waiting to see what it does really, and day by day it's sort of displaying that it is impulsive. We've got this first leg down here as an impulsive wave, and then we've got a corrective wave here. And then I can see here, without going into the intraday, we've got 1, 2, 3, 4, 5 to this point here. So that could have just been an A wave, a B wave, and a C wave at that point there, and then just gone up from that point, you know. So we're seeing bonds rally in line with, you know, with stock here. The bond, this is a TLT here. So, you know, they're moving up as such. So I figured that you know, that it's a bit of a flip case here too. The reverse is happening here. So we're looking at wave 4 can go back up to this point, but I don't know if it's going to go, you know, wander too far from 100, but I think it's going to stick to that. But yeah, so all this is in the reverse. But you know, I am starting to see now, I can look at this as 1 and 2 here, and 3 here, and possibly 4 and 5 here. It's a little bit short to tell just yet. So that means we could be in this leg coming back up here now. Now that can come back up, you know, 50, anywhere really from, you know, 40 to 60% really. You know, it can be less than 40 and it can be more than 60%, you know, but we'll just keep a bit of an eye on it. But that seems to be what we're looking at the moment. So I'm just seeing if we're going to get a bigger picture. I'm just going to see, you know, I mean, normally with corrections, I just like to really wait out the first leg to see if it's in 3 waves or 5 waves, and then we can pick it up from that point, because there's a dozen different types of corrections that can be a wave 4. And if the first leg is in 5 waves, well, then we know we're going to get another 5 after that. If we only get 3 waves here, well, then wave 4 could be, you know, a triangle or double zigzag or triple zigzag, all sorts of combos really. So just waiting to see on that. So yeah, while the yields are pulling back, we can sort of expect the bonds and the stocks to push higher. And as you know, at the moment, I'm in sort of 2 minds about being in a bear market or bull market. With the US stock market, we're using the S&P 4000 level price point as bit of a line in the sand, really, a support or resistance that will give us the next direction. So that's how we can keep it quite simple. Coming over to the dollar here, which is quite central to all the plays at the moment, and while well, this is really, you know, doing the inverse of you know, the indices and commodities at the moment to a point, and so we've been tracking it as wave 3 here and wave 4, and then down for wave 5 here. But the problem is that the wave 5 here hasn't really made a new definite low down here. It's not that it has to, it just has to produce 5 waves, and we, you know, been counting those out. And well, you know, it could be wave 5 with C of 4 here, so a low in place. It's at the 38.2%, sort of reached our target area, but it hasn't really made that low there. So I'm thinking to myself, well, could we have from wave 4 here, could we have all of this down just for wave 1 here, and then come back for wave 2, and then come down from here, that's the 50-60% retracement level, and then come down for wave 3, 4 and 5 down here. So that would make a little bit more sort of sense at that point, but I can't prove that until I can count 5 waves up here, and then I can count 3 back, and I can count 1, 2, 3, 4, 5 in here. Probably not finished off very well here, but we could probably look for one more little high here. Maybe it's getting a bit overlappy here, but look, if it breaches this point here, right, then this wave 2 scenario with wave 1 and 2 here would be right. And if that is correct, while that's coming down here, right, we're going to see stocks push to the upside, the S&P and those sorts of things. We'll also see commodities push up at that point. So we might be able to see, before we get to this wave 5 here, right, when this comes down to this, around this area here, then once it gets to here, we could see stocks rally, continue to rally while this is moving down, and commodities pushing to the upside, like gold have another move to the upside, and and so on, and we'll look at all of that. So just to point out that at this stage, this particular low here is really important. So if that gets breached, then you know what we're, you know, you can go long on most of those other things and short on this, and long on the pound and the Aussie and the, you know, everything, euro and whatever. But while this is not breached, then because this could be wave 1 here and coming back for wave 2 here, and then we could also have, I'm just shooting the breeze on this, it's important, we could have wave 1 here and wave 2 tucked in here, and we could be building to the upside at that point. So we've got the little 5 waves here, so we pull back 50-60%, and then we push up here again. You know, so that can happen. If that does push up there, then what have we got? Well, I'm thinking that we could have a bigger picture here. Now we've had, so putting this wave 4 here over here for this, that would be the next step to the upside. Yes, we could continue to call the low in over here for this and put wave 5 back and all those sorts of things. That's possible. But if we go to the daily chart, and I'll just explain why wave 4 would be over here for that, and there's what the case would be for that. It would be this here. So we've been currently tracking down as wave 1 and 2 and 3 and 4 and 5 to this point here. But what about if we don't look at this as wave 1, 2, 3, 4, 5 coming down a bit further, and it actually goes up higher? Well, the next logical step would to be put wave 4 there, and then wave 5 over here, and call this wave 3 here, and then push this back over to this point, and this one back over to this point, and look at this as the A wave and ABC for the B wave, down for 1. This is corrective here for 2, and then all of this is wave 3, 4 and 5. So that's another possibility as well. I mean, it still wouldn't be far from our target if it did this as well at 38.2%. So we've been, you know, I've been trying to figure out, do we have wave 3 at the top here, or do we have a really, you know, a wave 5 top here? This particular first move down through here doesn't count very nicely as a 5-wave structure, and also this little point down here, it doesn't really count nicely anywhere in all the other currencies as well. Being the US dollar here, yen here is a nice ABC at this point, you know. So I'm just waiting to see how this A, B, C down to this point in 5 waves down carries out. And also too with the, you know, just if we just take a quick look at the euro, because it is quite sort of central to everything as well. So this is in reverse to what we've just been looking at. You know, the euro coming up here doesn't really count nicely as 5 waves. We could get wave 1 out of that, but wave 4 overlaps wave 1 here a little bit. So it's not the best impulse wave. And this is really but ugly, this thing here. It doesn't count very nicely as 5 waves up there, so you could probably do a WXY with all of this as well in amongst all here. But all I'm saying is that this does not really count quite nicely as an impulse wave to the upside. It is moving to the upside, and that's all good, and it's quite powerful here, and it's very typical of a third wave to break out of, you know, an Elliott or any trend channel. So we're just trying to figure this here. There's a good case here for 1, 2, 3, 4 and 5 up here to have a top in play. So it's possible to have a top in play there, and a low in place for the US yen, and also a low in here, but I don't have any further evidence to prove anything. So it's a bit of a mystery here, and I'm just looking at other ways I could count this here as to make the market go further up at that point. So not quite there just yet with the US dollar. I mean, this is central to everything, and there's times we do know what's going on and times when we don't know. So, you know, when we're coming down here, we had 5 waves and we had the correction, and we had another 5. So while this was pushing down, we knew stocks would be pushing up, and while this was pushing up, we knew stocks would be pushing down, and vice versa. So it's been very helpful, and also with the commodities as well. But there are blind spots as we you know, drive around in these markets. So sometimes we just need to be a little bit patient. Sometimes we know, sometimes we don't. That's it. So over to the gold market. So with this ETF here, so this could also be included for, you know, ABX and Newcrest Mining and the others. Anything that's got a pattern, any stock that's got a pattern looking like this, could be quite bullish at this point, because we're looking for wave B up here, and then all we have to do is count 5 waves down here. Always easier said than done, but 1 and 2 here, and 3 and 4 and 5 here. So it seems to fit. So that means we could be in a bull market at this point with gold. So, but we don't have 5 waves up here yet. You know, this big wave 1 up here, we don't have 5 waves. We could look at it, we could count this up in a few different ways. There's no problems with that. But as it goes, we've got wave 1 and 2 here, and then 1 and 2, nice 1, 2, 3, 4, 5, third wave, fourth wave sitting in here. So we're looking for this to push up into wave 5 of 3, then 4, and then 5. If we do get these 5 waves up here, well, then we know that we'll be bullish at that point. The 61.8% is back in this green box here. So longer term traders that are going to be holding on to things wouldn't want to be, you know, getting FOMO'd out at this particular point, because, you know, there's a beginning of a trend, there's the middle of the trend, and there's the end of the trend, and, you know, new traders get in at the end of the trend. So yeah, a bit of patience with all of this, but looking a little bit, this could be counted differently. We could also count this as 1 and 2 here, then 1 and 2 and 3, 4, 5 up here, and have all of this as wave 1 up here, and then have wave 2 here. So 1 and 2 at this point, 1 and 2 and 1 and 2. But the situation with that is that we would still end up coming back if we take this low here and take it up to say, hang on, Minky. Minky's watching YouTube doggy things. So some dogs watch TV and some don't. There we go. Thanks, Mars. So even if this went from this point to this point, you can still see the 50-60% is back down here as well. So whichever way I look at it, I still feel that it doesn't, you know, markets don't have to pull back to the 50-60%. They could be short. Sometimes they just come back to the wave 4s, you know, but still they would come back here. So we've got this thin green line here to have a part trade here if you wanted to at this point. But it does appear to be bullish. That's the thing, but it's not there yet. We could also have this as an A wave, a B wave, 1, 2, 3, 4, 5, and at that C, this third wave here, that could also be a C wave as an ABC rally, and it finishes at that point. And then we just come down from, you know, we come, you know, it ends up coming down at that point because it's only in an ABC point at that stage. But looking at it in terms of, you know, the right look and perspective, it's looking quite sort of bullish at that point. So yeah, I mean, where do we go with US spot gold at that point? So this is US spot gold here at the moment. So it's a little bit hard to decipher this move down here. At first glance, I thought, well, 1, 2, 3, 4, 5, but it's not really the high. This is the high over here, and it's all a little bit sort of messy. Can we look at it as a wave 4 at this point here? So if that is the case, then, I mean, first of all, if this is 5 waves down here, let's just look at the flip side. If you're going to go long, you need to know the short side. So if we put this to here, we can see that the 61.8% is right here. So we know that this is the 50-60% retracement level area, and I'll just put that through there because it's still going to give a hard, delete that, give a hard time at that particular point. And it does make a nice A wave, B wave and C wave here. So we could have all of this down here as wave 1 and then an ABC for wave 2. This would be down for 1, then back for 2 and down here. So we could actually go short under here. You could probably even go short under here with a very small position as well, but I'll just put it here for the time being. And yeah, so this would be down for 1 and ABC back for 2, right on the 61.8%, down for 1 and back for 2, and then down at this point. But at the same time, if we look at this here as wave 4 down here, then we can look at this as wave 1 here with an A and a B and a C wave for wave 2. And then it becomes a little bit more interesting here because it does look impulsive up here with the corrective wave here. So this morning when we were doing the Australian video, we talked about going long at that point. We figured that you could do that a little bit earlier as well, but just leaving it at that point, because if that's breached, then it's likely that we're going to be moving into a third wave to this point here. So that means that this would be, well, let's just label it. This would be wave 1 here and wave 2 at this point, if that, only if that top gets breached here, right? And then up here, somewhere up in yonder here would be wave 3 and 4. And then up for wave 5 to make wave 3, because wave 3 normally comes in at the previous tops over here, you know. So this particular wave 3 would be here, and then wave 4, and then we'll push up into 18 here. And this kind of becomes interesting up here. This is where we can kind of, not straight away, but eventually this would be like the first high above the level, and anything above that we can be long from that point onwards. We can look at a more bullish picture at that point, because we'd been looking at that bullish picture on the daily charts here. Let me just get to this. So this was looking at it. If we look at it in terms of GDX, we can look at this as 1 and 2 and 3 and 4, and then the extension in wave 5 here. For wave, and then look at this here, but we need this first high above the level, so that's what this move up here would be. Once we've got that first high above the level, then we can drop it down to this point and then look to go long at that point. So we're trying to figure out if we can look for a bigger bullish picture to the upside here. I know some folks have called it bullish way before I have, and so on, and good on them for that. But I need to, you know, I'm a bit of, sometimes, you know, I'm a bit of a slow learner, but I just, you know, it takes me a while to sort of change sometimes from my opinions. We're all a bit like that as we get old and grumpy and crusty and so on. So, but anyway, it's not proven, nothing is proven to me yet that we have a strong impulse wave in gold yet. It's looking good, but it's actually not confirmed, you know. So, you know, we know those mistakes by marrying the good-looking woman rather than the practical woman, so to speak. So that's gold. Silver is much the same as well. I was looking at this here as a little wave 3 up here with an AB, and then 1, 2, 3, 4, 5 in here. So I'm a bit hard to see in here, but 1, 2, 3, 4, 5. It doesn't really matter at this point, but if this top here is taken out, then we can look to be bullish at that point, because this move up here is very high at the 61.8%. Then we can move it to the B wave. We normally work on the B wave, but I can also see here we've got 1, 2, 3, 4, 5. So we could bring it down to this point here as well. So that getting taken out, you might just want to look at this as a smaller trade here first. So a smaller position here. So we'll just give it a thin green line. And once that's breached there, the stop can just go under here for that. And then the other thing to do is always just drift over towards the levels. So between 100 and 200, or rather $21 and $22, the 22.50 is kind of at that point there. So a classic trading levels pattern on the 50 here, on the midpoint, would be another way to look at it in that regard, just in case it falls out of bed. So support on this here would be you could soak up all that. You could forget about this here and just go this one over here, look for the first high above the level. If you can't work out the classic trading levels pattern, then just look for the first high above the level and stick your trigger on top of that, just by a point or so. And if that's breached, then you're on your way. It's a bit safer to do it that way. That will keep you safe. So safe trade's not always the sexiest looking thing, but they're safer. So that's silver, and over to the to lithium. So we're going to be looking at the metals now, the base metals or green metals as they call them now. So this is an Australian company, and this has been a little bit of a template, because when I look at some of the ETFs, I don't particularly like the ETFs in a lot of these spaces, especially the lithium space, because those ETFs, they've got technology companies in there as well, battery companies and Samsung and Panasonic and all of these sort of things wrapped up in there. And we know that the tech sector is getting hit a little bit, so it doesn't really give a nice clean slate of the lithium market per se. So there's a couple of things I've discovered which I mentioned in the Australian video this week. So I'm just going to go here for a moment. Now, some of the big US stocks, of course, are SQM and ALB here. And let's just bring them up for a second on the weekly chart here for these. So this is SQM here, and I think I might even just have a look at it on the monthly. Let's just do that. And these are big companies. These are these are $30 billion companies as such, and they're in bull markets as such, and I can quite clearly see they're going higher. But the situation is that this is log scale, or is it log? Yeah, so that's log scale. So yeah, look, they're going higher. I don't have any qualms with that. They're hitting big numbers like 100, so one's the strongest number in the market, and it's going to sit there. And ALB is the same as well. They've been fantastic company. It does a few other things as well, so that's need to take that on board a little bit, especially if you're doing straight lithium plays, and looking at lithium, and we kind of are. So these are like $30 billion companies. Now, these other ones here, these two that I've got here out of China, these are $150 billion companies. Right, so CNY up here for China, and this one's Gangfeng here, yeah, so I still don't know a lot about it, but it's just a much bigger company as such, and it's also buzzing around the $100 mark here as well. So really, in terms of a classic trading levels pattern, we got the arrival, the reaction, the first high above the level, and now we're getting the ABC pattern here. So the long trades for these would come out across the top here, getting support on the 100 at this point. And the other one here is, because they like to work in numbers here, This is also, well, $140 billion company. It's in Sichuan, and I think it's pronounced T I N G. I think it's pronounced. I could be wrong, but that's another little thing here. But it's quite interesting, really, because some mining company in Sichuan, and the company is 46% of the production of lithium worldwide. I know Australia is basically owns 53% of lithium, so it's quite big, and I can see that it's owned by also Energy Australia here, joint venture. So I don't know much about it, but I'm just going to be learning a little bit more about these things and see who's who and what's what, and sort of get into it a little bit more as we go. And that's what I've mentioned, and that's what we're doing, and so on. This company is also around, interestingly enough, around that mark there. So I don't know if this is in US dollars yet, probably, but I will. There's another little job to do. But yeah, I mean, some interesting things here for this. Just I can see that, you know, all of this here is on lower volume, and this is also on lower volume coming into here as well. So it's basically at the 100 here. So there's nothing really we need to do at this point with this. We can see that the structures to the upside are impulsive. So we should be seeing further upside, but I just feel that we need to come down a little bit further on all of these here. So this will be, go to the weekly chart. I think I might have even had this labeled. I've got to double check this though. It just looked like from this point here as 1 and 2 here, then 1, 2, 3, 4, 5 here. But it leaves such a big wave 4 here. It doesn't feel right, you know. But I was thinking 1 and 2 and 3 and 4 and 5, which is probably wrong because this is too much here. But you can also see 2 here while this has been coming down here. You see how the volume's dropped off? So there's no sellers here. The sellers, nobody wants to sell. So all we need to do is wait for this. And, you know, once the market sits on the 100 here, then like all these other lithium stocks that we track in Australia here, all the smaller ones, they're going to be pushing up at that point. So they're all correcting at the moment, and that's why I was looking at Pilbara here, minerals. I was thinking this here would be, you know, 1 and 2, then 1, 2, 3, 4 here. It looks like this is drifting up a little bit higher here, so I'll just see. But I just don't think that it's finished coming down here just yet. If that's the high, we've got 1, 2, 3, 4, 5. So we can look at it as the A wave, the B wave over here. And I'm looking at it as the B wave and not wave 2, by the way, because the size of it here is, you know, is B wave material, not wave 2 material. Wave 2 is simple and sharp, you know. So that would leave this here as wave 1 and 2, and then 1, 2, 3, 4, 5 here for the third wave, and then the fourth wave, and then the fifth wave. So I think that we've got, and probably after Christmas, we'll be looking for that move to the upside, but I could be wrong. I'll need to look at some others as well, but that's kind of where we are for the lithium thing. So I think there's more lows to come in the market, so we don't need to do so much at this point. The nickel here, you know, I've seen these patterns before, as I've mentioned, that we could look at them as wave 1 and 2 and 1 and 2 and 1 and 2, so to speak. But the problem with that at the moment is that it does appear from the top here, we've got kind of an impulse wave coming down. So we've been looking at this coming down as wave 1 here. It could certainly be an A wave as well at this point. We could be in we're in some type of correction here. Either a B wave or a larger wave 4, but that's the way I've got it at the moment. And just, you know, over the last, you know, week or so, we've been looking at this as wave A or wave 1 and B and 2, and then 1 and 2 here last time we spoke, and we've seen this move along, scoot along here now, so that's quite good. We'll see if we get 1, 2, 3, 4, 5 here. So the A wave, the B wave, and the C wave of wave 2 coming back up to that the magic 61.8% sort of number up in this area here. Okay, so basically up here somewhere. So we'll see how that plays out in the 28. So we'll see that dance around the 28 at that stage. I'm just going to move a few things off some other charting things here, just so we've got some things to work with. Okay, so that's nickel. We're expecting it to go further up, but not that far, 28.50 or something of that nature. And copper, last time this is copper here, so we can look at it as wave A, B, and C up here. We can do that. We could also look at this whole, first of all, it really looks like a corrective rally. So we should see more downside, but we know wave fours can get complicated. So we may end up looking at all of this as just the A wave up here and A, B, C for the B wave, and then up for the C wave. We could also look at all of this here we've got 5 waves down here. So we could look at it as wave 1 and 2 here, and then 3, 4, and 5 down here as well. So yeah, which way that's going to play out. Last time we spoke, we were in wave 4 area here, and we've seen wave 5 come down to finish that off. So we've got 1, 2 here, and 3 and 4 and 5. So that's all played out quite nicely. So we'll see some sort of corrective rally here. We'll just give it a bit of time. I don't think it's worth trading long here at this point with it, but we can end up back up here for that. So that's where that is at that point. Yeah, so do we come down, the thing here I don't know is, do we come down as 1, 2, 3, 4, 5, or do we come down as the A wave, the B wave, and the C wave? So this would be the A wave here going back for the B wave. So if this is simple and sharp, then we'll see it as a wave 2. But if it's sideways and complicated and we don't know what it is, well, then it's likely to be a B wave at that point, and we can pick it up at that stage, So because we've got 5 here, we should expect some sort of rally and then another move down. So that's as much as I know. So being in these type of corrections here, you really need to be mindful that anything can happen at this point with this market. So it's just working in lots of 3s, and when it's working in lots of 3s, it can just double into double zigzags and so on. It could even be a triangle pattern, as the A wave, the B wave, the C wave, the D wave, and the E wave here, and then down. There's a whole lot of things that can happen here. So I'll have to only stay with what I know, just explain to you that it can get a bit out of hand. But in the meantime, it does appear now that we have got 5 waves down, so we can expect a rally and then down again at that point. And over to the uranium, and with the uranium here, one of the things that takeaways that we have is it does appear that we've got 5 waves up here. Understanding this move down here is a little bit more complicated. It does appear that it's hard to get 5 waves out of this here. It's more like we've got 1, 2, 3, 4, 5 here for the A wave, the B wave, and the C wave. So it does and this is corrective as well. So looking at it as a WXY here for the Y wave, and then a W, or I could go over here for this, and I could put this here as well, and I could put this here, and we can have wave 1 up here, and then wave 2 here, and then building up for 1 and 2, and then building to the upside. That's all doable. I want to thank Jeffrey, he knows who I'm talking about, for sending me over some charts. And so I wanted to talk about those charts, and I won't show you the chart because I didn't have permission to do that, but I want to go back over to here, and I want to have a look at where are we? Commodities here. So commodities here. Now I wanted to look at a couple of things here. So Jeff, you were using this chart here, which is URNM, this is a weekly chart here, which I'm thinking that was the beta charts here. So let me just get this onto the daily chart here. So you were using this chart here, which I think is what it is. And yeah, I mean, you could see the 1, 2, 3, 4, 5 up here in the ABC sort of pattern happening here, and expecting it to go up further, and that's good. But I also wanted to point out too that in Canada, I think it is Amex, you've also got this one here. Yeah, so you've got the same code here, URNM and URNM here. So just this one's got a bit more volume in it, a little bit more thing in it. So it's also an ETF as well, and it's also by Sprott. So these guys do a great job. So I kind of got a bit of faith in their work. Also, that's all the data I have on it. So I was looking at this as being wave 1 to here and 2 to here, then 1 and 2. If we can just open this up a little bit here, and so yeah, 1 and 2 into here, and then also 1, 2, 3, 4, 5 at this point in there. So 1, 2, 3, 4, 5 here for wave 1, 2 here, and then 3 to here, and then 4 and 5 to here. And then we've got the A wave, the B wave. We've got 1, 2, 3, 4, 5 in here. So the third, fourth, and the fifth here. I haven't really resolved the fifth yet. So I mean, it should go here, but so I'm a little bit unsure about this at the moment. But once again, we're still presented with the whichever market that we look at, and we'll have a look at PDN as well, which is an Australian uranium company. So we're also presented with this particular pattern down here as 1, 2, 3, 4, 5 here. So the A wave, the B wave, and the C wave. So having that as the WXY is still the same. So the question is this the low? That's the question that we need to try to understand with everything. So in this case here, we can look at this as being an impulse wave up here. We could look at this in terms of wave 1 here, and I'll need to adjust this, and then 1, 2, 3, 4, 5 here. So 3, 4, and yeah, we'll just put wave 5 up there. We'll just take that with a pinch of salt, and we could probably, where are we, Dave? We don't want on the weekly, we just want it here. We probably look at it as a minute degree, or maybe even daily. We could even drop it down a bit further, and that will do for the time being. We could drop it down 1 degree, but then we got to kind of understand the correction. So looking from this low to this high here, we're already at the, I can just see we're already at the 61.8% here. So this coming up to this point up here, coming back here, this is the 61.8% is right on the 65. So the 65 is a medium level. It's halfway between 50 and 80, two major levels. So yeah, look, we could let it drift down a little bit further, but obviously we'd be looking at this as the A wave, some sort of B wave in here, then 1 and 2 and 3 and 4 and 5. So we can allow it to come down a little bit, but at the end of the day, we would want to see, if it was going to be bullish, we would want to see it get support on top of the 65 and then take that out. That would be there, because we've got to be careful it doesn't drop down here. And in terms of dropping down here further, I just want to point out that it's possible to look at this. I had it as a WXY and looking at this as wave 1 here, but it's also possible to look at this 5-wave structure up here a little bit differently. So we could look at this as we could look at this as a B wave here and a C wave here, for instance. You know, we could look at this, excuse me here, we could look at this as, doesn't really count as a 5-wave structure here, so that's the good news about this, but still, we could look at it as still a larger A wave here, and then an A and a B and a C wave here, right? And then come down for 5 waves here and then go up from that point. So 1 and 2 and dropping into 3 down here. So looking at this as a B wave and a C wave here and coming. So it's kind of important to to get this right here. So this will be the same with all the markets, whichever ones you look at, is really we need to either establish a really good support on top of 65 and a little bit of a classic trading levels pattern at that point, or take the top out here to do that. And the Australian market will keep a bit of an eye on PDN as well. So I think it's down here somewhere, yeah, PDN here. So it presents the same situation. They've all got the same pattern. There's a few different things like PDN here. You could use this as wave 1 and 2 in here, but on the previous market, this is lower and this is higher here as well than the other market. So this was the high on the other market, but we're still left with this, basically this 3-wave move here and then this move. So, do we look at this as some sort of, I don't know, A wave and then a little A, B and C wave up here? Probably not. We're probably safe with all of this. I mean, the good news is that for the longer term, this pattern is corrective. It's not an impulsive pattern. It's a bullish corrective pattern, and there will be new highs made. That's the saving grace. The question that we need to ask ourselves is this move up here, is this wave 1 and is this wave 2, and do we go up for wave 3, 4 and 5? That's the question. So all I can say at this point is if this B wave gets taken out, you can be long at that point. In the meantime, it could certainly drop down a bit lower. So I think that's kind of just my current thoughts on it. I'll need to mull it over a little bit more, but thanks for introducing me back to PDN and the URNM charts. So they will be helpful, so I can start to understand them a little bit better. But that's the take on uranium. So at this stage here, we could look at this one here, and we're thinking, all said and done, we're looking for a little move down here and then a move up from that point. Is that going to be the case? I don't know. There's still a few if and buts about it. But if we see new highs, then we'll know where we are. We've done our homework and we can move into that. So that's the uranium. Over to crude here, and with crude we've been looking at this as wave 3 here with an A and a B and a C for wave 4, and then coming down for wave 5. Everything was going rosy. We had wave 1 pegged, wave 2, wave 1, 2, 3, 4, 5 for the third wave, the fourth wave, and then we get this thing here, because here I could go wave 1 here and 2 here and 3 here and 4 here and 5, but it doesn't count very well. It counts 5 waves down to this point here, and then they've got the correction, then we've got another 5 here. So I'm just wondering if this wave 4 here needs to come over here, and we've got another low to make here. But the same, and look at this as an A wave, a B wave and a C wave. You with me there? So I don't know if this is going to be that, or we need to put this over here, or do we just call the low in and look at this as in 3 waves? Because one of the other things in this whole market coming down here, all of this here, we've been looking at it like, I've been looking at it like that, here as an ABC to come down, here as an ABC, here as an ABC. So, these moves down, I've been looking at them like that, So maybe that's okay like that. So, it just doesn't make it clear, that's all. So I just figured, when I don't know what's going on, is I just revert back to the trading levels, and I would need to see the first high above the level here before I could call a long trade in at that point. It's as simple as that, because really this is actually trending down, and it's come down here and it's vibrated around here and it's dropped and it's retested it here, but it could just be retesting it again for the second time and then dropping again. So we would need to see the $80 as the support to get that happening. Okay, so that's where we are at the moment with that. I'm just going to remove these. We don't need that. I don't need that. Don't need that. So yeah, let's just give that a little bit more time and see what we get at that point. And the gas market. So the gas market here, we've been looking at it in terms of an A wave down here, and then an A and a B and a looking at this move up here for the B wave. But I'm quite happy to put a top in here, but at the same time I don't have 5 waves down here yet, so I can look at this as an A wave, a B wave, 1, 2, 3, 4, 5 here for the C wave. This here, you could look at this as an impulsive move, then an ABC point. But if this low gets taken out, if this low here is breached, right, if that's breached, then we can call the top in up here. Simple as that. I mean, as a wave 4, it's okay. It hasn't taken over wave 1 here, but I can certainly get 5 waves up here for this. You know, it's not very good, and there's a few rules broken, and we'll have to put wave B over here and look at this as the A, B, C here to this point. We would need to drag wave 1 over to here. We'd need to drag 2 to here. We'd need to put this over to here. We'd need to put this here, and then we'd have 3, 4, 5 to here, and then 5 waves, 1, 2, 3, 4, 5 up here for that. So there's a few things that we can do to make that fit to have wave B up there, and it's probably the case, but I just wanted to see if we get 5 waves down here first. And because also too, the other point here is that this B wave here, it might be that we've got the A, the B and the C wave up to this point, and that's it. But it could get a bit more complicated here. It hit our 61.8%, so that's cool, but we could be, you know, it could just get more complicated here. You know, it would be nice if we just get 5 waves down here. That would make life easy, you know, but I don't even have that to start with. If we get 5, if this drops down here, then we can look at this as 1, 2, 3, 4, 5 here. Then we can have an A, B, C correction here, and at the same time we can go short at that point here. But otherwise this could get a bit more complicated here. This is a bit like nickel really, so we just need to be a bit careful about, you know, what we've got here. We just need, you know, to short it, we need an impulse wave, and we don't have that here just yet. So that's where we are. Let's see. I mean, it's a bit big for a 4th wave here. So we'll just see how that plays out here. I mean, you could certainly go long above this top here as well. You could probably go long above that top there as well. But the way to do that, if you're going to go long above there, is go from the 7,000 here and go to group 1 of 7,000. So that would be, you would want that top of minor group 1, the $7.30, if I can put it on there, as a tested support. So you want a little classic trading levels pattern here. You've kind of got that already. You've got here the arrival, the reaction, the first high above the level, the ABC correction. So you can go long above this B wave top here, but you may as well just wait for a bit more support on top of the 30 at that point. Okay, so that would be that to the upside. I'm just going to put that back at 7. Just want to... This is just another little trick, and this is the 50% point here. Still comes in at around 7.3 anyway, a bit lower, but that's the 50% is the important number there at that point. Alrighty, I'll just leave it at that for the time being. Thanks for tuning in, much appreciated. Cheers.